Hey, Bulls and Bears, I hope you are doing excellent. Back here with another dose of economic reality. My name is JJ. The name of this channel is called Bull, Boom, Bear, Bust. And as the title of this video indicates, my feelings is that a debt crisis is guaranteed to happen. I'm talking about a national sovereign debt crisis here. And I'll explain all the details behind it, how we need to prepare for it. But first, let's get something kind of out of the way or out in the open. And it really is out in the open. But there have been more than just a few people that have been saying that I've been predicting a market crash. Well, eventually, yes, we're going to see another crash just like we saw in 2020. And that was more of a flash crash, right? It went down close to 40%. All the indices pretty close to that amount. But the recovery was so fast that you had to be very quick to go in and buy at the bottom and then make a lot of money on the way up. And since then, we've seen markets explode higher. Now, I think markets are going to go higher. If you listen to some people's comments about this channel, they've been saying that I've been predicting a market crash. But timelines are important. Yes, someday in the very near future there will be, and we'll talk about the debt crisis that I see coming here in just a few minutes. But for now, I think there's going to be a massive short squeeze, and I think there's going to be a big rise in the markets. And when I say short squeeze, that's not a bearish thing; that's a bullish thing. That means stocks are going to get pushed a lot higher. Meaning the people that are shorting the stocks or trying to make money with the market going down are going to get squeezed out of their short positions because they're going to be upside down so bad in their trades. All right. But that's what I mean when I say short squeeze. I say markets going higher in the near future. But eventually, this debt crisis is going to come to fruition and it's going to cause a lot of panic. Now, what do I mean by debt crisis? Well, let's just put a few stats and facts out there. The United States has had about 7 years now of the national debt exceeding gross domestic product. Folks, that is a formula for insolvency. And people wonder why we have all these other countries out there turning their back on the US dollar and trading outside of the US dollar. Even 10 years ago, if you would have said that as many countries as we are seeing now trading outside of the US dollar, people would have said you were crazy. That'll never happen. The US dollar is king forever. Well, it's still king for now. It still makes up a majority of global trade. I believe it's just under 60%, but the amount is dwindling, or the days are counting down to where this is going to happen. And countries see this GDP being exceeded by the national debt for several years in a row, and it's just a matter of time before smart countries, turn their back on the dollar. No, I don't want to see the dollar collapse because that's going to really affect all of our lifestyles here. But people that are positioned well, especially in precious metals, in my opinion, silver being one of the best, will do very well in these times. This is going to be, in my opinion, a massive debt transfer. Now, am I trading in the stock market right now? Actually, yes, I do have stocks that I hold, but the way I've been trading over the past few years hasn't been really buying and selling very frequently. It's been kind of buy at the great times or the best opportunities and then sell, when the price skyrockets. And I've done just that. I'll give you a couple examples. So back in 2020, when the market crashed, remember oil crashed also during 2020. We even had negative oil prices for a very brief period. I believe it was maybe a week or somewhere around there. And that was a great opportunity to get into oil stocks. And I've been holding ExxonMobil stock since then. I sold over half of it because the price doubled. So I got rid of it, take some profits. But I still hold some of that. Other dip buys, Carvana was one in the past year that I had a great, $4 something a share, and I had to check the price. I still hold some of that. I ended up selling most of it, but still hold some of it because the run up was massive. So that's kind of my strategy: is I sit and wait for can't lose opportunities. Now there's no guarantee, but I wait for what I perceive as can't lose opportunities, right? When oil went negative, the first time that's ever happened, I think in the history of the United States, I'd have to look back, but I've never heard of that happening in my lifetime. So I figured that's a can't lose situation. Oil is not going to stay zero or negative. Same thing with Carvana stock at $4. And there's other opportunities out there. Tesla was a good dip buy at the beginning of the year. And, we'll get into some of that here. But let's talk about this here first. And let's go right over to this chart here. And this is out of Pew Research. And what we see here, I want to get the timeline right on this. If you look down here, that's about what 2016 is when the national debt started exceeding gross domestic product, right? So we know that pretty much every administration that we've seen in power has done nothing but increase the amount of debt. And they may talk a good game. They may say they're not going to run up the debt. From my 2016, we heard a lot of that tough talk. We're going to be, watching spending. We're going to be conservative, all this stuff. But really, the debt exploded worse under that president than any other president before then. And now this president's even worse than the previous president. It always has to get worse. And that's what happens in a Ponzi scheme, right? The spending and in this case, the debt has to exceed previous debt. Otherwise, the whole Ponzi scheme comes crashing down. So ultimately, we're going to see a debt crisis. This is going to implode. Who knows what's going to happen to the dollar? Could it be hyperinflation? I don't think so. I think we're going to see more deflation when the crisis happens for many reasons that we'll get into here in just a little bit. But I wanted to bring up this chart so you guys have a visual on how long it's been as far as the national debt exceeding gross domestic product. Now, several people have asked me, what do you mean by debt crisis? What does that actually mean? Well, let's go right over to probably one of the best definitions that I've seen. And this is out of Investopedia here. Let's go ahead and bring this up right now. And let's enlarge it here. The higher the debt to GDP ratio, the less likely the country will pay back its debt and the higher its risk of default, which could cause a financial panic in the domestic and international markets. So that's a pretty good definition. So basically, the U.S. is insolvent. We're on our way towards default. We can never pay back the national debt. That's been true for a long time, but it's only now with this GDP ratio that people are finally connecting the dots. And I think that's why recently, just in the past couple of years, we've seen countries now trading outside of the U.S. dollar. They realize that the days are numbered and that this is going to happen. So the can be kicked down the road for a long time, as many of you know. I'm not one here to put timelines on things. People have often pinned me down. You said there was going to be a crash or a collapse. I don't put timelines on things. I've got a crystal ball back here that I look in, and even the crystal ball is foggy as far as the actual timeline. But I do know that ultimately you'll be heavily rewarded if you're holding hard assets. That's my opinion. Even if there's not hyperinflation, as more countries realize what's going on, as the population basically awakens to the whole fiat money system, there's going to be a re-implementation of hard assets, especially precious metals, in my opinion, especially silver. Could still be a ways away. To me, it's a long-term play. If I thought it was coming in the next 6 months, I would sell everything and buy all silver right now, but I'm not doing that. I'm accumulating as time goes on. Accumulating, stacking is what I call it. That's why I try to say keep stacking. But stacking also has several meanings. Also, stacking can mean just preparing for what's ahead. I also believe there's going to be a massive food panic and shortages and supply chain disruptions. And I think there's going to be a financial system grid down scenario that's going to really cause a lot of panic. And I think things are going to unfold in this country like we've never seen before. Now, again, I'm not putting timelines on it, but I have to say these things will happen sooner rather than later. Sooner rather than later. I started thinking about something else and I lost my train of word thought there. But we're seeing society break down. I think the things that we're seeing today, just the robberies and the rising crime and what's happening in the cities. We had Xi Jinping from China go to visit San Francisco here recently, and they cleaned up all the streets. All the homeless tents got taken down. They washed out all the everything that's on the streets in San Francisco. You know what I'm talking about, and made it look really, really nice. And I think that's a good sign, or not a good sign. I would say that is a sign of what's happening overall in the economy. It looks good on the surface, like when the leader came out there for a visit. I'm sure that he looked around. He said, "Oh, nice looking city here," but he doesn't know that's not how it usually looks. And when you look at the economy, everything looks good. Everything's looking normal. People are driving nice cars. They're out spending money. They have shopping carts full of stuff. But do you know all the debt that's behind it? Look at just the automobile loan debt, way beyond where we were in the financial crisis, but nobody thinks twice about it. Nobody thinks anything is going to evolve from it. Well, millions of people are on their way towards turning the keys back into their vehicle because they're going to be so far underwater. Remember, people that were buying these overpriced cars were rolling everything into the loan, the closing costs, the taxes, and even now people have just enormous car payments that are not, it's not going to be sustainable as the cost of living remains elevated and other costs continue to rise. The cost of insurance is going up big time for cars and automobiles both. And I just talked to a friend of mine who's got their home on the market right now, and one of the reasons they chose to sell is because their homeowners association fees kept going up and up and up, and now their HOA fees are over $1,000 a month, and that's causing problems trying to sell the home because the buyers are looking at this and they're saying, wow, even if we pay the home off, we still are on the hook for $1,000 a month forever, and they can increase it. So it's almost not even like owning a home. It's basically like renting. And that's, not always that bad. There's some HOA fees that are not as bad, but that's just an example of how people are being squeezed, and the squeezing is not going to get more loosened. I think it's going to get tightened on most of the population, but it doesn't mean you can't be successful, you can't make money. A small part of the population, maybe 20% of the population, will continue to thrive. Most of the population, as you probably know by now, because it's been a data point or statistic that's been out there for a while now, most of the population is living paycheck to paycheck. But even living paycheck to paycheck here in the United States, we still live better than most people live in a large part of the world. Some people don't have any debt, but their standard of living is still very, very poor because they don't have a lot of the luxuries like we have here in the United States. But keep in mind, a lot of these luxuries are only made possible because we have the world reserve currency, because we have the ability to go into endless amounts of debt, what seems like endless amounts of debt, but it's not endless. There will be an end point where this scheme finally comes to an end because, again, the debt cannot be repaid, and therefore we're going to see a debt crisis. And let's talk about Tesla stock, and we're going to talk about electric vehicles here just for a couple minutes. We saw the stock peak in late 2021, $407. We're now down to $242. You've almost lost 50% if you would have bought at the peak. But if you would have bought at this dip here at the beginning of 2023, it was 113. Basically, you doubled your money. So you have to pick the time, the entry points. Where it is right now at 242, I would not be a buyer, especially with the data out there that, 1 in 5 buyers of electric vehicles. It was closer to 2 in 5, but the article I read was 1 in 5 owners of electrical vehicles say they're going back to gas vehicles. And there was a recent article out here about a documentary that was put out about someone driving an electric vehicle across the United States, and a big part of the charging stations, or a big percentage of those stations, were out of order. This person couldn't even charge their vehicle here. And this was the scene at about 40% of these charging stations. Sorry, out of order. Sorry, out of order. So that's something that I see as very negative as far as should you invest in Tesla or electric vehicles. And I think more people, as these charging stations continue to have problems, more people will be turning away from electric vehicles. And back to this Tesla stock for a minute, you see the peaks and the valleys. There's usually always some big run up or a short squeeze before the big drop. You see the run up here, the big drop afterwards, another run up to 360 back in March 2022, then another drop lower, another run up, a drop lower, and we've seen a bit of a recovery, but there could be another big run up before it drops lower. I think we're still going to see a rising market environment for the short term. Now, I don't think it's going to last to the end of 2024. I think we're going to see this crisis happen before the end of 2024. That's kind of my timeline. So always be ready. Always have emergency preparedness at your fingertips. Have 30 days cash. food, water, essential items out of the system, right? So this could happen in many different ways. The bottom line is be prepared. If you're like me, you're looking for investment opportunities wherever you can without being too greedy. And I'm happy just to have this channel to be here to communicate with all of you. Thank you so much for being here, for helping keep this channel alive. Thank you very much, everybody. We'll talk to you very soon. Keep stacking, everybody. Bye now.